Hey everyone, Sean Shertzer Bookkeeping here. Back for another video in our tax series. Today we're going to be talking about tax credits. What are tax credits and how are they different than deductions? Well, tax credits will reduce your taxable income dollar for dollar. Deductions, on the other hand, don't do it. It's like comparing apples to oranges almost. Deductions reduce your income or your adjusted gross income to get your taxable income. With tax credits, those take your taxable income and reduce it dollar for dollar. And your taxable income is what the IRS will tax you on. Let's say you, after all of your deductions, you come up with a taxable income of $75,000. Without any tax credits, the IRS is going to be taxing you on $75,000. So let me show you on this, the 1040 form here. So your AGI, your adjusted gross income, goes here, and then your deductions reduce that amount to come up with your taxable income. Once you get your taxable income here, that's where your tax comes into play. What the IRS is looking to tax you, or that's what you should be taxed. But wait, we have to add in any tax credits. Now, what are some examples of some tax credits? That's what we're focusing on today. So, tax credits usually get put onto your Schedule 3, which is an attachment to your 1040. And we'll go over all of that in another video, probably next week. But just some of the common ones are generally your foreign tax credit. That usually comes from, most often, if you have any international stocks or bonds you purchase. So let's say you are with Fidelity or Vanguard, and you put some money into some stocks, international stocks. Well, there's going to be some foreign tax involved there because they're foreign stocks. So whatever tax you pay on that once you sell those stocks, that is going to be part of this foreign tax credit. Another common credit is child tax credit. So if you have a dependent that you take care of in your home, generally your child up to 18 or another dependent, you would get an amount for a credit for that. Generally speaking, child tax credits are about $2,000 per child. But again, it varies, depends on your specific situation. But let's say you have a child and it's a $2,000 tax credit. And then you have some education credits. Let's say you are going to school, college or university specifically. You get to take some education credits for that. If you contribute to a retirement savings account, again, more often than not, it's an IRA, an individual retirement account, or a Roth account, a Roth IRA. Those you would take some credits for that, for contributing to those. The IRS wants you to contribute to your retirement savings, so they give you a credit for that. Some energy efficient home improvements, solar credits, for example. If you have energy efficient windows in your home, you can potentially take a tax credit for that. So once you add all of those up, you get that total amount. That goes on here to the 1040 amount from Schedule 3, line 8. So So let's say you have your child tax credit, and let's say you have $1,000 of education tax credits. That would be a total of $3,000. You get to take that directly off your taxable income, and then that would be your total tax. Okay. So you can see how tax credits are very handy and very beneficial. Deductions definitely help you as well, but if you were to compare them, they generally come out to about 25 or 30 cents to the dollar, if you can think about it that way. So deductions are helpful, but tax credits are more helpful. So if you want to make sure you owe the IRS the least amount possible, which most people usually do. We don't like giving our money to the government necessarily. So tax credits is the way to go. Now, I'm going to say that, but with a caveat of make sure you're only taking the tax credits that are appropriate for your situation. Taxes are one of those that a lot of people try to fudge numbers, and they get caught. Eventually they get caught. So definitely don't fudge your numbers. Only take the tax credits that are appropriate for your situation and that you can substantiate. And if we go over here to the IRS website, you can look into credits and deductions. One of them is the earned income tax credit. If you are under a certain income level, you can potentially qualify for this. So if you think you do, reach out to a tax professional and see if that's something you could possibly take advantage of. If you're a parent or caretaker, that's going to be your child or dependent tax credit. If you pay for higher education, again, college or university, undergraduate or graduate. If you put in money into retirement savings, that's going to qualify you for a credit as well. Clean vehicles or clean energy, the energy efficient windows or solar panels that I was talking about, you could potentially get a tax credit for that. If you buy health insurance in the marketplace, here in California, it is Covered California. If you buy health insurance through there, you can potentially get a tax credit for that. So definitely look into your tax credits and see what you can qualify for to minimize your tax bill. Okay. Again, if you have any questions whatsoever, please reach out. I'm available to answer any questions, and I would be happy to look into your tax situation and file your taxes for you. Next week, we will continue down the 1040 and talk about payments and look into whether you could expect a refund or what you owe and how to do that. Have a great day, everyone, and I will see you next week. Bye for now.